How's it going, everyone? It is the investing guy here, and I did something crazy. I bought 100 shares of a certain stock, and I want to tell you guys why. Make sure that you stick around so that you fully understand what I'm trying to do here. Guys, make sure that you subscribe. I am giving away a bunch of these hoodies. I'm giving away a hoodie every 50 subscribers. So we are one subscriber away. Right now we're at 649 subscribers, and I will give one away when we reach 650 subscribers. Especially if you're new here, I have one thing to ask you.
Who are you?
All right, guys, let's get right into the video. All right, so this here is the stock that I bought 100 shares of. The name is Energy Transfer, and they are a midstream company, which means that they transport oil. Most of their services are surrounded around Texas and whatnot, so that makes me a little bit bullish on them, just because I know that Texas is growing tremendously and quickly. So I'm really liking Energy Transfer on that aspect, but that's not the reason why I invested in Energy Transfer. If anything, I don't think that the stock price will go up. And give me a second, I will tell you guys why I bought 100 shares of this. So here's the proof. I have 100 shares here, and well, my market value is $912, and I'm already down $12.63. So I bought 100 shares of a stock that's price has been going down lately.
Are you stupid or something?
Now, one of the reasons why I feel quite safe investing in Energy Transfer is the fact that they offer a huge dividend of 6.52. So it's very important that you realize why I bought 100 shares. The reason why I bought 100 shares of Energy Transfer, well, was so that I could do something called a covered call. The reason why I want to start doing covered calls is because, well, I had to find another way to help out my dividend portfolio. Compared with my crypto portfolio, my dividend portfolio has been lagging quite a bit. My dividend portfolio has only been up maybe around 10%, if anything, while my crypto portfolio has been doing quite great. I am looking at other ways that I can help my dividend portfolio make some cash without me having to pump so much money into this, right? For next week, I'm gonna go ahead and let's say that I put a covered call for $9.50. What this means is that I am going to get paid $8 for selling a covered call for all 100 shares of my Energy Transfer. Well, you might be asking yourself, why would they do this? Well, people would want to purchase this. Let's say that they believe that Energy Transfer is going to go up to $9.70. Well, if it does, what happens here is that I have to sell my shares at $9.50. Even though the stock price might be at $9.70, I have to sell it to them for $9.50. That's kind of the risk that I'm playing here, that if Energy Transfer does decide to skyrocket up and I am under one of these covered calls, well, then I might miss out on a lot of the profits from that run up. But again, that's why you're looking for companies that don't really have those sudden spikes. Just like Energy Transfer here, I don't really see that it has those sudden spikes. So I feel quite safe going into these covered call plays, weekly covered call plays with Energy Transfer. So a little quick summary here of what I am seeing pretty much is that we're going to get $65 or give or take in terms of the dividend. So I'm feeling quite safe there, right? Not only that, but we're going to be getting an average of around $10 per week whenever we use the covered call strategy, which is going to be pretty much every week. So 10 times 52, let's say I do this for 1 year. So 10 times 52 will give us $520. Not only that, but adding the dividend itself, you can see here why this is such a lucrative strategy, right? So $520 plus 65, that would end up giving us $585. Okay, so I know that might not seem like a lot for now, but here's my plan. Eventually, I'm going to go ahead and get rid of Energy Transfer when I stack up enough Hormel, right? So then I'm going to stop doing the covered call strategy with Energy Transfer, and I will begin to do the covered call strategy with Hormel. And as you can see here, Hormel for the covered call strategy, they're not going to pay me $10, right? They're then going to pay me around $28 here. And then I do have a bigger picture, right? After Hormel, I do want to roll in those profits and do the same thing But then I do want to go into a company that I would not mind holding 100 shares of, and that would be Apple. And as you can see here, holding 100 shares of Apple, you can be making as much as $154 per week, right? So doing covered call, and that would be on average. Now, again, you do have to realize that you are running that risk of, let's say Apple has some great news and they run up, then you will lose some money. But then again, you can play it a little bit safer and go with the next one up over here. Instead of being so greedy, you can go for $117 instead of $154, right? So with these riskier companies, you can always just go up one more and you face less risk of losing out on those profits. Now, let's go the opposite. Let's say that you know for a fact that Apple is going to go down. Let's say that something happens and iPhones start breaking or whatever, right? And you know that Apple is going to go down, then you can go ahead and you can go on the bottom one down here because you know that, well, Apple is going to end up below 148. Now, this is a lot riskier, but then again, you are getting paid a lot more. So if something does go wrong, then you usually can recover those losses with the extra payment that you get. So I'm looking for other ways that my dividend portfolio can make me money. And I know that right now it's only $10 per week, but like I said, eventually I'm going to roll that into Hormel, which would then give me around, let's say, $30 a week. And then I'm going to roll that into Apple, which that's a big picture. Holding 100 shares of Apple, that would give me around $150 per week, and that's saying that Apple stays at $150, right? So it's usually around, you're looking at around a 1% per week, or being able to purchase one share per week. Imagine how cool that is going to be when the day comes where I hold 100 shares of Apple and I could do a covered call strategy and be earning $140 something per week just by doing a covered call strategy. But then again, remember, this is not all happy and whatnot. There are some risks to covered call strategies, and that is that if the stock decides to shoot up, you will miss out on those profits and you will be forced to close your covered call option and sell at that price, right? So for example, let's say Apple's at 148 and it ends up at 155, and you put a covered call for 150, then you're going to have to sell at $150 and miss out on those extra $5 per share. All right, guys, that's pretty much it for this video. I hope that you guys enjoyed this, and I hope that you guys have a wonderful day. Like I like to say, let's go to the moon together, and I'll catch you guys on the next one.